Hi, my name is Michelle Holmes, and welcome to another edition of CMS Forex News. Today is Monday, May 12, 2008. In Australia, home loans disappointed on the downside, falling 6.1% for March from a downwardly revised 6.8% in February. Also, the NAB Business Confidence Survey showed current conditions fell to -8 in April from March's -4 reading. High borrowing costs, inflation, and global uncertainties are causing a drop in sentiment. The Australian-US dollar pair declined immediately following the releases but found support near 0.9365. Overnight, the pair climbed 100 pips from that level as risk appetite returned to global stock markets and boosted carry trade. The Aussie, with its high interest rate, is a prime destination for carry trade flows. After a wave of risk aversion last week, European and London stocks recovered overnight. The DJ Stocks 500 was up 0.3%, and the London Exchange was 0.3% higher as of 1:30 p.m. Eastern Time. U.S. stocks opened higher, with the Dow gaining 100 points, or 0.8%. The Euro-Yen pair had a strong rally as a result. After retesting its Friday's low near 158.55, the pair climbed more than 250 pips. The Euro paired its losses from the last two sessions. In the UK, producer output prices rose 1.4% for the month of April and 7.5% in annual terms. Both figures are the highest since records began being kept in 1986. Producer input prices, or prices of raw materials, were up 23.3% in annual terms and climbed 2.4% on the month. Both were higher than economists' forecast and may imply that central bank will have to ease interest rates at a more gradual pace than they earlier thought. The UK global goods trade deficit narrowed from £7.6 billion to £7.4 billion. That is a 7-month low. Imports declined 0.5%, while exports were up 0.5%. The weaker pound may be helping the export sector in the UK, while weakening consumer and business confidence and spending may continue putting a drag on imports. The higher inflation data and a rebound in stocks helped send the pound-yen pair 300 pips higher overnight, which wiped away the losses from Friday's session. The UK is set to release consumer inflation data tomorrow and its quarterly inflation report on Wednesday. Traders will analyze whether the central bank will focus on inflation going forward despite a slowing economy. The pound-dollar pair rallied 160 pips to climb above 1.96 after hitting an intraday low at 1.9445. The Bank of England is more likely to take on a more gradual approach to lowering interest rates, which should help to support the pound. The euro-dollar rallied overnight, finding resistance near 1.5550. It started the global session falling below 1.54, but as European trading commenced, the pair surged 160 pips. In Canada, prices for new homes in March rose at a monthly rate of 0.2%, down from 0.3% in February and 0.6% in January. Annual price growth slowed to 6.1%. Building permits were down in March, and housing starts declined in April. Tighter credit conditions are taking the steam out of the Canadian housing market. The US dollar-Canadian dollar pair was lower today, falling below 1.0050, its support from Friday. The pair tested resistance near 1.01 overnight and headed towards parity. The poor Canadian housing data temporarily stalled the loonies' gains on the greenback. Tonight, the UK will post BRC retail sales, RICS housing prices balance, and follow that overnight with its consumer and retail price indexes. Tomorrow, the US releases its retail sales along with import prices and business inventories. That wraps it up for the day in Forex News. Join us here again tomorrow at cmsfx.com.